Hey guys! It has been some time since we posted a video on the channel. We have been busy last week, but we have been quite active on LinkedIn and you can follow us there to have live updates on market analysis. As always, we do this analysis in good faith and we want our viewers to benefit from our analysis. But we are not financial advisors and these are our own personal views and not investment advice. Today we will review the interesting market action from last week and we will do a market analysis on DXY, Nasdaq, Dowjones, GBPUSD, USDJPY, gold and crude oil. DXY. We have to look at the monthly chart for the broadest context. On the monthly chart we have the monthly FVG which we presented in our previous videos. Although the price has tested the monthly FVG several times, it has been rejected. Although the price closed on the FVG in September, the price has rebounded off this sharply in October. And if we look above, we have touched an order block and retraced. Above this we have liquidity in the form of old highs. We think that there is a strong possibility of price going up and taking this liquidity out. The weekly chart shows a big move up followed by a prolonged period of consolidation. We are still in this consolidation bounded by the top and bottom FVG. The top FVG has not been tested yet, and so there is a good chance of price going into the top FVG. If we zoom in closer, we can see a weekly FVG just above which might be the target. But we are at a monthly order block which might provide some resistance. On the daily chart, we have had a strong up move and price has closed above the daily FVG. This daily FVG will provide support on any retracement. There is a daily down close candle within the FVG order block. This is the ideal place to enter shorts on GBPUSD and EURUSD if price retraces. On the 4-hour chart we also see a 4-hour FVG within the daily FVG. We think that next week's price is likely to test this level. If price shows strength from here, then this area is the ideal place to take longs on DXY or shorts on GBPUSD. GBPUSD. The weekly chart shows the price tested the weekly FVG and bounced off it. The moving averages are moving up and the 20 EMA has crossed above the 50 EMA, which is bullish. However, if DXY continues to move higher, then the pound will not be able to resist the move down and will move further into the FVG and possibly take out the weekly low. This is the daily chart with all the FVG marked. We are bearish on GBPUSD because of the bullish price action in DXY. So we are looking at short opportunities in the GBP next week. The best entries on Forex involve a move in counter-trend direction to take out the stop losses of short-term traders and induce a bullish sentiment in a bearish order flow. The price is then moved in the direction of the order flow. On this basis, we think if the GBP-USD pair moves up to the daily FVG, then shorts can be taken on lower time frame market structure breaks and target the recent lows as the profit target. Other target is 1.2850, which is the propulsion block. On the 4-hour chart, we see the price is supported by an FVG formed on the down move. On the 1-hour chart, we have marked out all the 1-hour FVG where potential shorts can be taken. If the price goes above the daily FVG, then GBPUSD becomes bullish. USDJPY. The monthly chart of USDJPY shows a strong uptrend with the moving averages pointing up. More recently, the price took a short-term low but has rallied very strongly after that. This suggests that this move was a liquidity grab to stop out traders who were long. The price is currently in the middle of the monthly FVG. If the price can go above the FVG, then there is a good chance that the previous highs will be taken out. On the weekly chart, price is in the middle of the FVG, and we can expect retracement. The next best long opportunity would be the weekly FVG below. Price may or may not come to this FVG. The daily chart shows that the price is above all the EMA. There is a daily FVG just below current prices. This would be our first long opportunity. If this FVG fails, then price is likely headed to the weekly FVG below, which will give us the best long opportunity. Can we remind viewers that these are just our opinions and the price action may or may not follow like we want it to. We should always follow the price action and we should be willing to change our minds based on price action. Gold. The move in gold continues to amaze us. We had projected 2 standard deviation move on gold to be $2,720. Price has moved beyond that. This is in spite of 10-year yields rising. This suggests that the move in gold is mainly geopolitical, and if we put our conspiracy theory hat out, we think some insiders probably knew about the Israel strike on Iran, which is why the price moved up on Friday. We think that the price will gap up on Monday, but this is a good thing. We will explain why in a minute. The weekly chart shows strong sustained momentum. We have drawn the weekly FVG, then coming to the daily chart, we only have the weekly FVG as support. Gold is a highly manipulated market. So if price gaps up on Monday, it will induce a bullish retail sentiment. The smart money will likely sell and the retail will be stopped out. There is a good chance that the price will test the weekly FVG on Monday or Tuesday. We then look to see if the FVG can act as support. If it does, then we can look for longs from there. Silver. If you have been following us on YouTube, we have been bullish on gold and silver since February 2024. Here is the monthly chart of silver. The price is in a supply zone. But if we do a 2 standard deviation move on silver, then it gives us a target of $31. As the price is so volatile, it is better to use very small positions at support or buy silver miners. While we are at precious metals, we will have a look at 2 miners that we are interested in. The first one is Newmont Mining. Newmont Mining is one of the largest gold miners in the world. They announced their earnings last week and the stock sold off. This is because the all-in sustaining cost for gold production rose to $1,600. As the production rises, the costs will fall. But the price has corrected back to the weekly EMAs. The ideal entry zone on the monthly chart is shown. But we have entered with a small position. If price corrects to the buy zone, then we will add another position on this. If gold continues its rise, then Newmont Mining has potential to rise to all-time highs at $75. We will maintain bullish bias provided gold does not have a significant correction. We have in the past owned Barrick Gold, which has lower debt than Newmont, but Barrick has underperformed Newmont significantly. Also, Barrick has some mines in Mali, which is considered to be risky in the current geopolitical environment. The second one is Pan American Silver. We tipped Pan American Silver around $19, you have to go back and watch our previous videos for that. The price has moved up with the rise in silver prices, and we think this is one of the best stocks for pure silver exposure. Price has potential to go to $35 provided silver does not fall too much. Dow Jones. This is the weekly chart of the Dow Jones. As you can see, the price is in a strong uptrend. But the price has corrected last week with a big bearish engulfing candle. The price is extended away from the 20 EMA. And whenever the price is extended like this, the price corrects. The most likely downside target is the weekly FVG outlined, and if that FVG doesn't hold, then price will test the 20 EMA below. On the daily chart, the price has closed below the 20 EMA and price has bounced off the 50 EMA. On the 4-hour chart, we can see a clear market maker-sell model with original consolidation followed by a move up and move down. We expect the price to go to the weekly FVG below the consolidation next week. Finally, we want to present 2 stocks as usual which have shown potential. The first one is Sophie. This is the monthly chart of Sophie. See the clear bullish candle. So any retracement is a buy on this stock. The second one is CF Industries. This company is not widely known, but they are one of the biggest producers of ammonia, which is an important ingredient for urea manufacturing. The chart shows that the price has broken structure and is bullish. But there is a fundamental reason to be interested in this stock rooted in geopolitics. Muffet read in the papers that the European gas prices have gone up. Here is the chart comparing NYMEX natural gas prices with CF Industries. In the past, there is a close correlation with natural gas prices and CF Industries. This is because natural gas is one of the biggest ingredients in ammonia production. However, now there is plentiful supply of natural gas, which means that the natural gas prices in the US has fallen. So if the natural gas prices spike in Europe, CF Industries stands to benefit from lower prices of natural gas stock compared to European producers. Okay, that's all for today. We hope we have provided value, and if so, please like and subscribe.